Hey everyone, brentonhanes here, and welcome back to the Investor Preview. Today we're going to do a deal spotlight on a recently closed transaction that I assisted a client on. But first, for those that don't know me, my name is Brenton Haynes. I'm a real estate investor. I am also a real estate broker. I've been in the business 20 years. I own multifamily myself, currently at 78 doors, two buildings, a 30 unit and a 48 unit. My family's been investing in real estate for the last 60 years. In the family portfolio, we are pushing almost 900 multifamily units. So we love getting our hands on some large scale 100 plus properties and going through them and rehabbing them and getting them to perform much better than what they were before. But let's jump back in. So we got a deal spotlight here for you. I was helping a client. The client is a local client here in Colorado. He's a good friend of mine. He has owned a couple single family residences for a few years. And I've been kind of nudging him to get into the multifamily world. And so we started looking around and we found this Ford unit for him in Colorado Springs. So we're going to start him off pretty light just so he can get his arms around it, get his systems in place, and kind of help him build his portfolio along with his professional resume as the end game for him is to jump into the commercial market as well, which would be 5+ units. So we're kind of maxing that out. So we got real easy residential financing. We're going to be doing a 30-year term on this property. We were able to obtain a interest rate of 3.49%, and that's fixed for 30 years. And we're going to use a 4% vacancy on this. Now, a little bit about the property. Every unit is a 2-bedroom unit, which I really like. So, and out of the 4 units, 2 have been rehabbed, 2 haven't. So 50% have been updated. They're approximately about 825 square feet. One thing about this property that threw a little curveball in is that it has a common area entrance, and with some of our residential investors didn't like that as far as on the loan side. So we had to shop for a little bit of loans, but it wasn't anything that was hard to overcome. It was just something a little nuance for them that they wanted to stay away from. Now it's got a common laundry area, and the machines and the whole laundry is rented out to a company, so they take care of that. And we're projecting about 11% upside in rents on this property. So there is some upside, and we have a few other little things to tackle on this building, but nothing major. I think it's going to be a great property for him. I think he'll enjoy what he's going to learn and get his systems in place, and we'll be able to guide him through some of that steps. So let's jump in it. And for those of you that haven't done so already, so I'm going to be going through a property analysis sheet that I built. So I have several that I use. I commonly refer to this one as my quick and dirty analysis sheet. So what I mean by that is I can take any property off the MLS, LoopNet, CoStar, and I can plug in my data real quick within 5 minutes, as long as all the information's there. And obviously we're going to tweak the numbers for our own application, and it'll spit out if this is going to be something I should dig in a little bit deeper, or if it's on to the next property. Chances are, more than not, most of them get kicked to the curb, and the ones that we really like, we got to jump on quick in this market. So, but you can download this Excel sheet, this workbook, for free from my website. Go to www.realestate365.net. You know, I do have you register your name and email. You can plug your phone number in if you want. But guys, I'm not going to spam you. I'm not real big at getting my inbox filled, but this is more importantly for any corrections or updates to the worksheet. So we are currently on version 2.3, and you can see that in the bottom left-hand corner. And we haven't done too many updates to it. This is something I kind of redid and have gone through with the coronavirus and the lockdown. I thought I'd go through my Excel sheets and kind of freshen them up, and so I made this quick and dirty one. And I use this when I'm analyzing properties for myself as well. So go ahead, download it, and this is what we're going to be going through. And so when you see it, you can get this for free, no big deal. So let's jump in it. So here is a 4-unit deal I did for a client in Colorado Springs. So we're going to start off on the input tab. It's the far left tab, and it's real simple. So anything that's in blue is an input. Anything that's black is a calculation that can't be changed. So starting from the top down, we're going to put in our date. I always like to know who analyzed it. Was it me, my client, someone else on my team? We'll normally put the property address in, but we're not going to disclose the address today, so we're just going to say Colorado Springs. Year built, we're looking at 1972, so it's not old, but it's not new, so we can anticipate a little bit of maintenance on this one. Property square footage, 3,424. We have 4 units. We're doing a 30% down payment on this property, and the purchase price was $630,000. Now, it is a little bit of a higher down payment, but we had some client goals that we wanted to reach with that, and we were able to obtain some of those goals with just a little bit of higher down payment. And so let's dive in it. So you can see as we go down to the next column, income, we have current and market rates. So we have our monthly income and what we project as our market monthly income. I look at monthly and annual, and I like to plug in monthly. It's a little bit harder because you got to usually convert that stuff from an OM, but I like to look at the monthly. I like those numbers, but the annual's there as well to make sure you're in there. So monthly income, that's going to be our rents. Usually other income, I'll do storage, laundry, rubs, which is the utility bill back. So this one on the other income, we have some laundry income and we have some rubs that are incorporated in that. Now you can break that down in the lower section in the notes, and I think our laundry income was about $25 a month, so we have about $375 in rubs on this property. So we can go down, we can see our basically on this property, I put in all our utilities, water, sewer, under that tab. Trash, there is some trash. It's very minimal. I just kind of lumped it all into one. You can see our property taxes, our insurance, and then we have our other and admin fee in there as well. So repairs and maintenance, as you can see on the next column over at the top, I'll actually start from the top and say, look, we're using a 4% vacancy, so that's about 1 unit vacant in about 2 months. Our mortgage rate is 3.49% over a 30-year term. We're not going to utilize any off-site property management. The client's going to manage it themselves. For repairs and maintenance, I'm using 7%, and we're using a 5% for reserves. Now I plugged in just an effective tax rate of 27%. My client's effective tax rate was not 27%. In fact, I don't know what his effective tax rate is, but we're just going to plug that in just for our video here today. And then you'll see on the 5-year analysis page any percent adjustments for our annual gross income, our annual expense increase, and annual appreciation. So you can plug any numbers that you feel are going to work best for you and your property in the area, and appreciation is always the big guess, right? Are we going to beat that? We're going to go flat? We're going to go negative? But I think we have at least 3% appreciation, if not more, in this property in this location. So location for this property, like I said, Colorado Springs, is going to be on the west side of I-25. It's in a really good area. It's a little bit on the northern side of Colorado Springs, so it's on the north side of downtown, but it's on the west side, so it is a great location. It's off of Garden of the Gods, and I like that area and that pocket over there very much for rental. So now that we filled out our input page, we're just going to click over real quick to our analysis page. And what you'll see is I just have a stock photo in there, but I think it's always great to add a photo of the property that you're analyzing. I've been in this business a while. Yes, I still print out some of my deals, especially when I drive by them. I'll analyze them. I'll print it out. I'll take the primary image off the MLS or LoopNet or CoStar, and I'll just paste that in there. You'll see some instructions on how to do it. But yeah, I like to put a picture on it so that way when I stack a few of these up on my desk, I can easily identify I'm a very, very visual person. So as you can see here at the very top here, we got our gross income, current and market rents. We have our square footage, we have our year built, and number of units. I tried to make this very presentable. You don't need to print out your input page. You can if you want, but this is my one page that I can just print out real quick or convert into a PDF, throw on my phone or on my tablet and look at it real quick. So on our left column, we have current rents, okay? Above that, we have our GRM, cap rate, cost per square foot for our current and market rents, cost per unit, and DCR debt coverage ratio. Okay, we're going to use that a little bit more in our commercial side, but it's a good indicator to have. So purchase price $630,000. We have our 30% down payment, so our first loan amount of $441,000. We have our 4% vacancy. We have our operating income and our operating expenses from our input page. So we're right around 28%. You know, I like to see, usually when I have property management, I like to see mid-30s just to know that we're in there. So I don't think we're too far off, assuming that this building has been maintained accordingly. So net operating income, our interest rate, annual and monthly debt service, so you can look at it both ways, but our cash flow, 11,500 or 6.1% cash on cash return of our 189,000 down payment. So client's goal was to hit the $1,000 a month marker on this one. Now our first year in is always our adjustment year, and we're always doing maybe some CapEx projects to get the building to kind of, you know, fall into that and be a little bit more predictable on our monthly cash flow depending on turnover and things of that nature. So I always advise my clients, hey, your first year is really don't anticipate too much cash flow. Typically, I see a lot of my investors put that money back in either rehabbing some units or getting the building up to speed, adding a little curb appeal, that sort of thing, so we can obtain the market rents. Now, that's not always the case, but it does happen quite frequently for us. We do that quite a bit as well. So so our cash on cash return at current rents, almost $1,000 a month with our equity build up. So that is our paying our loan down our first year. And so our total return is almost 20,000 or 10.5%. Now jumping real quickly over to our market rents column, you can see we're projecting about 11% upside. I kind of like seeing just on the low double digits. If I can get anywhere from 8 to 10% upside, I feel like that's a great little sweet spot to be in. I can typically negotiate a deal pretty well with that, and gives me an opportunity to push a better broom and get some rents up within the next year, depending on when leases are or if we're on month to month. So you can see our purchase price and our down payment, our vacancy, and our net operating income. So we'll be looking at about $16,000 on an annual basis, or just over an 8.5% return cash on cash at a market rate rent. So that's not too bad of a deal. I think this property is going to work out very well for my client. Now we can even look down at our first year indicators, and it's always fun to kind of see. I kind of, you know, we have our Foursquare, and I always love to see the crystal ball on this. You know, how close did we get to kind of anticipating some of this stuff? And you know what? Typically we can get pretty close. So we can see our appreciation, our cash flow, equity buildup, and depreciation, right? So we got our write-offs, and what we're going to do on cash flow and our total return there. So 23% total return first year, not too shabby at all. I think that's obtainable. I think we can get there, and especially if it stays on track and we don't have any real ugly surprises on some stuff that will really eat up a lot of that cash flow. And then for fun, I always like to do a 5-year analysis, and you can dive into that. You can break down years 1, 2, 3, 4, and 5. Kind of see now on our input page, we have our annual appreciation rate We're using 3%, and we can kind of calculate where that goes. I think we're going to see a little bit more in our appreciation rate, but this election will tell the tales. It may or may not impact it. Most of the time, it does not. This is a very different year, and we'll see if it has a good chance of impacting what investors do. But there we go, guys. I'm going to click back over to the analysis page. But here we go. This is just a real simple 4-unit, all 2-bedroom, which I like. I feel like 1-bedroom sometimes create a little bit too much turnover. Not against having some 1-bedrooms. Not a fan of all 1-bedrooms, but obviously I think when we get into the 2s and 3-bedrooms, we get a little bit more stable client, tenants in the building. So yeah. So any questions? Let me know. Hope you guys enjoyed this little deal spotlight. I got a couple more in the queue, so hopefully we can walk through a couple more with you guys on some of this stuff. And thanks so much for tuning in. Have an awesome day, and we will see you guys on the next video. Take care.